Hello investors and traders, today we'll speak about 3 dividend stocks for October to 2022. These rock-solid income stocks with a yield ranging from 5% to 7% can pay the age investor pocketbooks while making them richer. And before we start, I encourage you to subscribe to my channel. I have a lot of videos about dividend stocks, stock analysis, US market, European market. So if you're interested in investing in stock markets, equity shares, don't forget to subscribe into my channel. This year has served an unpleased reminder that the stock market doesn't move up in a straight line. Since the year began, the S&P 500 and growth-centric Nasdaq composite have each fallen into a bear market with a peak decline of more than 20%. To boot, the US economy has delivered back-to-back quarters of gross domestic product decline on the heels of historically high inflation. And of course now it very interesting and attractive looks the dividend stocks. And let's start with the first one. Today it's WBA, Walgreen Boots Alliance. So WBA has been paying a consecutive dividend for more than 80 years and has increased its base annual payout for the past 47 years. What typically makes healthcare stocks such a genius investment in their defensive nature. No matter how poorly the US economy or stock market perform, there is always going to be demand for prescription drugs, medical devices and healthcare services. However, the COVID-19 pandemic proved to be one of the few exceptions to this rule, at least for WBA. Because WBA is reliant on the foot traffic into its stores, the lockdowns associated with the pandemic hurt its sales and bottom line. Like other retailers, it's also contending with historically high inflation and the negative effect that can have on consumer spending. And yet there are numerous reasons to be excited about WBA as it enacts a multi-point turnaround strategy designed to boost its operation margin, organic growth rate and customer loyalty. Let's have a look on its chart. In my mind, for the last 10 years there is some kind of a range, yeah, and the range its borders is 20, 25 and 90. Now we are trading at the lower border of this range. And also we can see, if we check the waves, the Elliott waves, it was here the first wave, the second, the third, the fourth, and he's somewhere here supposed to be the fifth wave. So now we are traded here. The momentum indicator and RSI monthly chart, monthly time frame is 33, very low. So here we have a dividend yield more than 6%. Nice RSI, momentum indicator, and very stable stock, so why not to buy the stocks. Let's have a look on its fundamental parameters. Here we can see that the debt to EBITDA ratio is about 4, interest coverage 7, if it higher than 5, so it's okay. And also Altman's score is 2 and 4, so the probability of default in the future years not so high. The gross margin 20, net margin 4, not so high marginality company, but at least it's still a profitable company, so it's good. And the dividend yield here, yeah, is 6, and the 3-year dividend growth rate is about 5%, payout 30 only. So it means that 30% from its net income company pays as dividends. So WBA has a place to even increase its dividend payments. And let's check the value. We can see that PE ratio only 5, so it's not expensive, and the PS, price per share, only 1.2. So from this point of view, very cheap stock. Of course it has debt, but in my mind this stock is one of the safest from if you a dividend picker, dividend investor. So WBA of course supposed to to be in your portfolio. Let's check the second stock for today. It's innovative industrial properties. It's a cannabis focused real estate investment trust, so it's a REIT. And over the past 5 years, this trust has grown its quarterly payout by more than 1000%. Just 20 months ago, marijuana stocks were all the rage on Wall Street, with Democrats taking narrow control of Congress and Joe Biden winning the presidency. The expectation was for sweeping federal cannabis reform. Unfortunately, no reforms have taken shape, and pot stocks have been pummeled as a result. However, individual states maintain the right to legalize the regulate marijuana. Around 3/4 all of states have given the green light to medical cannabis, which provides more than enough opportunity for the company like this to profit. And let's take its chart. It's a weekly chart here. So now we are trading in the major support level since 2019. It was please pay attention that it was more than in the high. It was about 300. Now it's less than 100. Its price. So we're down more than 70%, so it's very nice correction. The current dividend yield is 8%, so you may receive very nice dividend payment if you will buy this stock. And if we will check historically the PS ratio, price per share, we can see that now it's about 10, so it's not expensive at all. It was more than 30, 40, 20 last 5 years, so now it's one of the best points and one of the best levels to purchase this stock. So this one of the stock that I'm considering to buy. And the last stock for today, of course, it's Intel. It's semiconductor stock. Now it's its price only $25. Let me check. Yeah, 1 minute. 3 months ago it was 30% higher. So let's speak about Intel. So like most cyclical stocks, Intel is taking it on the chin at the moment. A combination of economic weakness, high inflation, and employees returning to the office has slowed personal computer sales and data center spending, at least temporary. To boot advanced micro devices has been chipping away at Intel Mobile and Service Center Processing Unit market share. So AMD is a real very strong player at this market. While this would appear to be a less than ideal scenario for Intel, a deeper dive points to an expensive cash flow judgment that has multiple catalysts on the horizon. First, concerns about Intel's loss of market share look to be an overreaction. According to the second quarter market share data from Mercury Research, Intel maintains the desktop PC, mobile, and server market share in the neighborhood of 75 to 86. Even if AMD were to continue slowly chipping away at Intel's PCU market share, the sheer growth potential of mobile devices and data center services should allow Intel to steadily grow its sales and generate abundant cash flow. And let's don't forget that Intel is also prime beneficiary of the Chips and Science Act, which was signed into law by President Joe Biden last month. This act will provide about 52 billion in subsidies to chip designers and manufacturers, with the goal of boosting chip production, innovation, and hiring with the US. Intel, which is spending about 20 billion to build 2 manufacturing plants in Ohio, could eventually up its presence to 8 total factories, which with this federal aid. And let's check the chart. In my mind, here was the first wave, the correctional second, and then the third one. Now we are in the correctional wave. The fourth one is the sub wave, is wave A, B, and C. And here in my mind is going to C finish somewhere here in this lower border of this range. So why not? It's supposed to be somewhere here, and in this case we can see the stock down more than 30-40%. I'm not sure, of course it will be the case, because right now its dividend yield is even higher than 5%. So very nice dividend yield. And please check their site, the momentum indicator on the monthly basis, it's even lower than 30, so it's already oversold. So of course it's a very nice levels to buy this stock. Let's have a look on the fundamental parameters. We can see debt to EBITDA ratio only 2, interest coverage 25, so any problems with that. Very nice marginality, net margin is 26, so very impressive. And the P ratio is also like WBA, it's not expensive. P ratio about 6, and the PS only 1 and 4, so very cheap in this standpoint of view. We can see also that any problems with their liquidity, current ratio, quick ratio, both of them more than above 1. So we can see that the dividend yield is 5%, payout is also like WBA is only 30%, so a huge potential to the stock to increase even at dividend payments. And the 3-year dividend growth rate is also 5%. So it's for the dividend holders, it's the holders of these stocks, it also very good sign. So if you like this video, don't forget to subscribe to my channel, and see you on the next time. Bye.